Mark, let's talk about this and then vehicle sales overall. But for Tesla, this was an issue where the deliveries didn't meet the end of the quarter expectations. Elon Musk says it's because they're changing the way they do some of the shippings. Doesn't want to see a big crush at the end of the quarter. That makes sense, but the stock is the weakest performer in the S&P 500, at least in the pre-market this morning. What do you think about it all?
Well, the Tesla stock price is really based on their ability to continue to grow at accelerated rates. And probably what you saw in this quarter is not only, the supply chain issues that are affecting the whole industry, but at the same time, they're ramping up their plants in Austin and Berlin. And when you're ramping up a new plant, issues can happen. And so I think that plus some of the supply chain issues probably dented their ability to achieve their production and deliveries this quarter.
Well, there was also a temporary shutdown of its factory in China, and that had to be an issue, too. But longer term, what do you think about the growth potential, the growth possibilities, and whether or not they'll be able to make up for it in the fourth quarter?
Well, I think, at their heart, Tesla is a battery and a software company that's learning how to manufacture cars. And I think they're doing a very good job over the last couple of years of, improving their productivity at each of their plants. And when you combine that knowledge that they're continuing to gain with the big macro trends of the facts that, EVs are going to continue to capture more and more of the marketplace, and the fact that their brand is known as the leader and is held in high regard, I think that bodes well for them.
What about auto sales overall? We haven't really seen any slowdown in auto sales or auto demand, even with the Fed tightening at this point, and that's because of this long backlog there is. How long will that last at this point? There aren't incentives out there. The dealers don't really have to do anything to get these things moving off the floor.
Well, Becky, there's that old saying, trees don't grow to the sky. And, what you have right now is you have a lot of pent up demand. You have the average selling prices that are near record levels. So that's telling you that pent up demand is still there. But the bottom line is, we're going to run into affordability issues, particularly given the headwinds for the market, whether it's the rising interest rates, which impacts, obviously, monthly payments on cars. You have consumer confidence that's been declining. You have inflation, and you have just overall economic uncertainty. So at some point, the automakers are going to bleed off their waiting lists. They're going to restock the dealers, and that's going to impact their production. I think the point being is going into an economic slowdown, they're in much better shape, particularly because of the low inventories than they have been in literally the most recent economic slowdown. So I think they'll fare pretty well, but affordability is going to start to be an issue. And you're starting to see it in places like Europe, where they order a vehicle and those order deliveries are down the last couple of months.